Evening, everybody. It's 6:42 on this Thursday evening, the 14th of March, and this is your closing comment. In case you didn't see it, I also did a video explaining the reasoning behind the silver short. Seeing as we came into the week long, made some money in it, and now we're on the short side. You can see that either on tonight's Daily Note or in our blog or in the Discord room. So plenty of ways for you to see it. The link is there. Okay, so I'm going to start with the chart on the screen because it has so much to do with pretty much everything else, and that is the long bond. It got a bit of a rally, excuse me, yesterday because of the good turnout for the 30-year bond auction. But today was a different story. And as you can see, well, I'm going to move this in a little so you can see. Um, it looks like this purple line, which is the 5-week MA, is about to cross back to the downside through the 20-week, which would be a big negative. I mean, you can see what happens when it goes in the other direction, so you can pretty much expect it's going to do that here too. Also, the MACD is absolutely ready to cross. The last couple of weeks, I've been talking about how stretched it is from the lower to the upper band here, and it looks like we're going lower. The reason I mention it is because while gold and silver traditionally have been for inflation and uh, geopolitical issues, in the last couple of months, it has been much more susceptible to interest rates. And so if we turn down here, we were down a point and a half today. We're down 220 on the week. And so it looks like we're going to have higher rates. That'll hurt the home builders. That will hurt real estate. That will hurt, I expect, a lot of both stocks and commodities. So that's the reason that we're in that. We got short of the SLV next Friday, the 22nd, because I expect the silver to move fairly quickly. I'll show you what that looks like. We were up earlier in the day and we finished pretty close to the low. Let's see what it looks like. Still a higher high, higher low for the week. But when we go back to the daily, you can see what I'm looking at here. Besides the fact that this area has been very, very tough for us to get through. So you can see we were up on the day, new recovery high, and right into the teeth of this topping area. It was only 2 days that it closed higher than where it was trading today. Tonight we're down another 4 cents. I don't think that's overwhelming, but you also see how the MACD has gotten stretched. It tends to be in a very confined area, whether it's up or down. So we're short. I'd like to be out of it tomorrow, but we'll see how it goes. Okay, as far as stocks go, we had a bunch of earnings, not a bunch of earnings, but some important earnings. Dick's Sporting Goods this morning, after closing at 187 yesterday, sorry, it was as high as 198.51, which was up about $10 in the pre-opening comment. However, it continued to the upside and, in fact, never traded below 208. So it was 198 up 11 in the pre-market. And then the low for the day was 208. The high was 222.95. The last is 216.51. That's up 28.75 or 15%. We also had Dollar General. And, we had a big day yesterday in Dollar Tree, a big disappointment. So this morning, um, we were trading in the 147.50 area. We got down to 147 after the earnings. Then we turned and we got back up to 169, and then we turned back down during the day to 158 and change. The last is 150, and that's down about 817. So a pretty big move there. We also had a lot of trouble in a couple of the names that we've seen having trouble all along. Tesla, 162.22, down another 7 or 4.4%. Not to put too fine a point on it. Tesla this week is down 1274 or 7.2%, and included in that, of course, is today's 4.4%. We also had more grief for Boeing, which this week is 181.60. That's down almost $17 or 8.5%. But this is a stock that at the end of the year was up around the 265 area. So 265 to 182, that's pretty dramatic stuff. After the close, we had Adobe and Ulta. Adobe was a beat, top and bottom line, but with poor guidance. The stock had closed 571.68. Immediately after the numbers came out, it traded down to 503.34. The last on it is 513.75. That's down 59.80, or a solid 10%. And we had Ulta, which missed a little on revenues, beat on earnings. It had closed at 565.44. On the headline news of the beat, it traded up to 609.77, and then it turned down. 528.10 was the low so far. This is all extended hours numbers. 531.50 down 35.68, or 6.3%. So a pretty tough day. And while the stocks were not very changed in the Dow, the NASDAQ, and the S&P, the Dow was down 225. It finished down 137. That's only 0.35 of 1%, so a third of a percent. But the advanced declines in the NYSE were 4-1 to the downside. Those were about even yesterday. It was a big move to the downside in the advanced declines on the NASDAQ, which were also 3-1 to the downside, even though it only closed down 49.24, also about a third of a percent. The S&P down 14.83, well off the low, down a third of a percent. The big mover to the downside was the Russell, down 40.54 or 1.96, and following right behind it was the transports, down 212.75, 1.43%. Volume picked up today back to over 5 billion at 5.4 billion. And the VIX, which has been holding down in the 13-14 area, popped up to 15 in the last couple of days. Today closed 1440, down 65 cents or 4.7%. So there you have it, folks. I'm trying to keep these a little bit shorter. And I'll be back first thing in the morning when we have at 8:30 we have let's see, 8:30 we have February import and export prices. and the March Empire State number. At 9:15, we have February industrial production and capacity utilization, and then at 10 o'clock, we have the preliminary March University of Michigan consumer sentiment. Consensus is for 77.3, which would be an improvement from the prior 76.9. Have a good evening.